Welcome to the Westernacher Retail Merchandise Planning webinar. I am Russell Sad and I will be your host. My colleague Markus Kramer will be supporting us in the chat. Please send him your questions as we go along. Before we begin, I would like to give you some background information on our company. Westernacher has been active in the market for over 40 years and, as a globally active company, supports its clients from branch offices across Europe, Asia and North America. Our over 500 consultants allow us to provide operational expertise and technological innovations to our customers wherever they might be. Our company is 100% employee-owned, and this gives us a unique stability. We can also look back over a rich history of expertise in planning solutions. Our experts possess deep industry know-how and are able to successfully deliver large and complex planning projects. Should you have any questions regarding planning, please do not hesitate to contact us. We look forward to speaking with you. I shall be showing you how you can profit from retail merchandise planning and explain what the key performance indicators are that one should plan in order to gain the full benefits of this kind of tool. But in order to plan successfully, such a tool must be one that eases the burden on the planner, who is faced with a challenging enough task and would therefore welcome smart features and functions that make things quicker and easier for them. In the second part of the webinar, I will go through our proven approach in implementing such a solution and explain the options you would have with a retail planning tool based on SAP. Through the continual planning of your most important key figures, especially with an ongoing comparison of your planned figures against your actual results, you are able to uncover previously hidden optimization potentials within your organization. This is how corporate planning can help you to continuously improve your operative results, especially in branches and areas in which, on account of their high complexity, it had previously been impossible to introduce an adequate system of planning. We would understand such a system of planning to be one that enables you to generate suitably detailed forecasts for your most important key figures, to compare these against your actual results, and thereby identify potentials for sustainable improvements in your turnover and profitability. The findings gained here are used to optimize your operative processes. The next planning cycle would serve to verify whether these measures were effective, and to clarify where your processes could be improved further. Retailers face the challenge that their supply chains are highly complex, and that this makes it difficult to generate reliable forecasts. The significant numbers of transactions they have with their end customers, paired with a very high level of detail, present retail planning with certain hurdles. Should a fashion company, for example, need to plan sales, margins, and budgets for its 1,000 stores in 30 countries, across all collections, down to the level of product groups themselves, if not for individual products, then the associated effort is already considerable. Further complexity arises when, through changing customer behavior, such as a preference for online purchases, new sales channels opening, that would also need to be integrated within the existing planning framework, and all of this under the increasing pressure on margins and continuously shrinking product life cycles. Such challenges can, of course, be bested. How one should, in our experience, proceed, I will show you in the next sections. To begin, it is important that you plan the key performance indicators, that is to say, those that have the biggest influence on your business, at the right level of detail. Our first step is to create a sales plan from which, in a second step, the therefore necessary inventory levels are calculated. This is of central importance, as the inventory level has two key trade-offs that we must balance. On the one hand, there must obviously be enough stock on hand to meet demand, and therefore from which to fully realize our planned sales. If we have too little stock on hand, we lose out on potential sales. The problem, though, is that overstocking results in inventory that can't be sold for the full retail price and can only be cleared through markdowns. In a worst case, such overstocks would end up having to be destroyed. This would have a negative impact on our margins. Our goal is therefore to determine the ideal, the optimum, inventory levels required by all goods in all sales channels and shops. To coin a phrase, the better we forecast stocks, the better our profitability. The forecasting of planned stocks has therefore taken on a central meaning. Only with a reliable inventory forecast can we meet our optimum sales and margin targets. A further complication is that our inventory must also be in the right product groups, so that the mix of stock for individual products or product groups matches their demand. In the case of seasonally varying demand for certain types of products, again, such as in the fashion industry, this exercise must be repeated for each individual collection. There are a variety of methods for calculating planned stock. The only common ground between them is that the required stock levels are derived from the sales plan. The basis for a stock forecast is always a valid sales plan. The inventory level calculation methods may differ in their calculation logic and in their applicability to different types of retail goods. In the case of fashionable it is, for example, better to use a sales ratio, whereas a year-round stock item is best modelled using forward weeks of supply. Exactly which planning parameters should be used is therefore strongly determined by the merchandise itself. It is therefore altogether likely, in practice, that a company will need to use a combination of methods to plan stock for its different types of products. In all, it must be determined whether your preferred software even allows you to calculate the stocks using your preferred logic. Generally, the tools available for retail merchandise planning use a fixed, specific method for the calculation of stocks and do not permit alternatives. It is therefore important to know the precise features you need in a planning application. Only then is it possible to judge if a solution is a good match to your company's processes. In the case of industries where seasonal products predominate, such as the fashion industry, more complexities await us. Especially in the case of a large variety of different product lines with many point-of-sales transactions, the amount of data in retail can rapidly reach a magnitude which can no longer be mastered using classical methods. The seasonality of products also gives rise to a new dimension that needs to be planned, and which greatly increases both complexity and data volume. Goods must arrive at the right time to the right floor areas, to be sold within particular seasonal windows, and unsold goods then have to make way for the next season's goods, even if sales were below expectations. These examples show that successful planning in trade is not trivial and can be done successfully only through clever tools and features. Over the next 2 slides, I will show you how a retail planning tool must be structured so that your company can meet the challenge of retail planning. The use of reference data improves both planning quality and efficiency. Reference data is used to easily generate planned values. instead of having to enter them manually. For this purpose, one can use either past actuals or old plan versions as a basis which can then be re-evaluated, for example, for us to generate a plan for the year 2015 by using past data from 2014, but raising that by 5%. This raising of the cells can be done either by a corresponding planning function or by the planner directly entering an increase of 5% on the total. This total is then broken down proportionately to the underlying positions. In addition, it is possible to adjust individual values on any level, for these to be aggregated upwards or disaggregated downwards. The planning of individual values, I should add, is very time-consuming and should really be the exception and not the rule. What we want to have is planning by exception. A very good way to reduce the planning effort is to group similar entities together, to plan them jointly as a single unit. These could, for example, be stores in the same geographical location, or stores having similar sales portfolios. In order to do this, the software has to provide characteristics by which such groupings can be made. These functions can only be carried out with decent performance when modern in-memory technologies are used. Only these types of systems are able to process the vast amounts of data for planners with acceptable speed. Examples include the SAP Business Accelerator or the HANA in-memory database. Microsoft Excel has prevailed as the front end in planning applications because it was used by planners even before the introduction of centralized planning solutions, and it easily allows additional calculations on the side and even brings some features that are still useful for modern solutions. In addition to these absolutely necessary basic features, there are a number of functions that are not absolutely necessary on their own, but when brought together significantly simplify planning. Included among these is the ability to save plans as versions. These can be used as reference data for later planning rounds, or alternatively compared against each other or even against actuals. This enables us to check the validity of past plans. It is helpful for the planner to plan different scenarios, such as by creating best and worst cases, which are then approved by their supervisor before the plan is released. This release process is best supported by a workflow scenario. The planner would hand their plan onto their manager and, after their superior has reviewed it, a release or the requirement to make modifications before resubmitting it would be given to them. If the plan is accepted, it is automatically used to generate a plan version. All in all, this serves to streamline and better manage the planning process. The full integration of plan data within corporate reporting ensures that planners are able to continuously compare all plan values against actual values to find out which processes could be further optimized. Once the functional requirements for the retail planning are known, we can begin the implementation. I'll show you on the following slides how this looks in practice. Firstly, it is important to determine what value the introduction of the planning tool is to bring. In the best case, you can quantify the impact on your business through expected improvement of your key performance indicators, and thus calculate the return on investment. If we are to frame this in terms of expected investment and business improvement, we need to find the processes that are to be covered by the new solution. With a view to a subsequent implementation, I would recommend that we first clearly define which the requirements are that add value to your business. This focus will help in choosing the future software product. However, the functionality must not be the only deciding factor when it comes to selecting the right product. In particular, the cost side and the integration into your existing system landscape are additional criteria that must be considered when choosing the right tool. In the implementation phase, you best achieve your goals when the project scope and the processes to be implemented are clearly defined, when the right team from business and IT experts is available, and when the product plan is outlined in detail and scrupulously followed. In a second step, after the actual implementation, the planning results are handed on to adjacent processes within the company to derive the maximum benefit for your business. The planning process itself is, depending on the company, already comprised of a number of individual steps, and has therefore already a high degree of complexity. But this is in turn only one part of the complex supply chain of a retail company, into which it must be integrated as seamlessly as possible. The optimization of these end-to-end relationships provides a significant contribution to value creation in your supply chain, and is necessarily included in the implementation strategy. As an example, we can consider the order process which will be receiving the planned quantities from the retail planning application as inputs, and which itself, furthermore, acts as a data provider at a later date in the in-season process to optimize the clearance sales as soon as the merchandise is presented on the sales floors. In order to select the right tools, there are a number of core requirements that are set by the decision process. A high degree of integration into the overall process is mandatory in order to achieve the full company-wide benefit. The use of modern in-memory technology is absolutely necessary for planning in the requisite level of detail in spite of the huge data volume. The planner must additionally be supported by a state-of-the-art front end, one which will allow you to meet the high demands placed on planning within the shortest possible time. There are basically two ways to establish a planning tool within your company. Either you evaluate and buy a ready-made retail planning application by one of the established manufacturers in the market, or you model your specific processes on a tailor-made in-house platform. This question is central and needs to be addressed in advance together with all stakeholders in the company. Different groups within the company might have different goals, which would first need to be clarified. We answer such questions using a clear set of criteria to then assess whether a make or buy solution is the more suitable in your situation. As a rule of thumb, it can be said that a complex, highly customized process would be better reflected in a tailored, customer-specific solution, whilst an out-of-the-box solution would be better suited to implement simple processes quickly. Which solutions SAP provides for retail planning, I will be showing you on the next slides. Currently, SAP offers two ready-made products for retail planning. SAP Merchandise and Assortment Planning is the older of the two tools, which is offered in the market for retail planning solutions. SAP has already announced that it will not be developing this product further. In addition, though, there is a newer rapid deployment solution which works on the latest technical basis and contains a basic scenario for a retail planning process, which can, within limits, be adjusted to customer needs. This product was previously used to engage with prospective customers to evaluate system near processes. It will be revised in 2015 and extended with a further component: SAP Assortment Planning for Retail. The product launch is scheduled for the fourth quarter of 2015. The technical basis for this product is SAP HANA and an integrated planning environment. We have had very good experiences in customer projects with exactly this setup and have implemented customized solutions based on a generic SAP toolset. The technical basis for tailor-made solutions, as I've said already, requires an in-memory platform like the SAP HANA database to allow mass data processing with a suitably high speed. The planning methodology is provided in a generic toolset, such as by SAP Integrated Planning and SAP Integrated Business Planning. These toolsets provide the opportunity to involve actual data from sources like SAP AFS, Retail, or other solutions, which is needed by the planning logic. As a front end, Microsoft Excel is usually used. This very basic scenario can be used to model all the core business requirements which a retail planning application needs. We have a standard retail planning template that uses exactly these technologies. This template enables us to easily discuss individual requirements and illustrate them. On the following slides, we will look at some of these functionalities, which can easily be integrated with the before-mentioned scenario based on SAP HANA and SAP Integrated Planning in a planning system. Fundamentally, it is important that all regions, sales channels, and product categories can be planned with the planning tool to ensure a complete picture of the business. This does not mean that all elements are planned using the same tool, rather that there are certainly going to be differences, such as in the way stocks are calculated. For the designers, it is extremely important that you do not constantly need to replan each element. Substantial time savings can be made by clustering stores that have remained unchanged for some time into larger units and common plans. Forming this kind of cluster can be done using various characteristics, such as size, location or range, or even the basis of key figures, such as sales. To support the planning process, it is usual to provide planning functions that perform complex calculations for a selected area. A simple example might be a sales increase of 3% for a region as compared to last year. In general, these functions are freely definable and therefore offer enormous flexibility in the planning process. An important example would be in the sales and inventory forecasting capabilities that would need to be adjusted as closely as possible to your needs. The application can be operated very easily. Just as in a pivot table, elevations can be changed flexibly. Key figures and characteristics can be shown and hidden as required. Manual entries are made by the planner at every level. A value entry can be changed, for example at the level of a national company, to then be broken down proportionately to all underlying stores within that country. The adjustment of discrete values at a highly detailed level is also possible, such as for single stores, with the results then being automatically aggregated into a country's earnings. It is helpful to plan at the results level so that the performance of all national companies can be easily adjusted to reach the desired outcomes. The number of key figures in the layout can also be dynamically adjusted. In this way, the complete set of available key figures is first held within the work list, so that they can be added dynamically to the drill down in the working area in the same manner as with a pivot table, depending on which key figures might be needed to answer a specific question. It is also useful if key figures can be entered both as absolute amounts as well as percentage ratios. We always recommend this option for the plannable and the most important reference key figures. So that we can better compare sales from different time periods against one another, it is usual within the retail sector to work with a retail calendar. This, like the normal calendar, divides the year into 52 weeks. But unlike the normal calendar, each quarter is comprised of exactly 3 months that are themselves made up in a pattern of 4, 4, and 5 whole weeks respectively. Our scenario supports planning with such a calendar as needed, down to the level of retail weeks. We usually set the timeline so that every screen allows planning to be done continuously, rolling forward without any restrictions to the time axis. Microsoft Excel has established itself as the front end of choice in planning. SAP has since integrated Microsoft Excel so tightly within its planning environment that any Excel function will interact harmoniously with the planning tool, and that planners who had previously conducted their planning purely within Excel can continue to use their favoured tool. With all of its known functionality, such as graphs and charts. Should Excel not be available, a web-based front end can, of course, be alternatively provided. And with that, we have covered the essentials of retail planning. If you would like to discuss this with us in greater depth, or have specific planning needs that we can help you with, please don't hesitate to contact us. Thank you for your participation. Goodbye and have a pleasant day.